and welcome to today's segment of The Power of Money. I'm doing solo today. Why? Because I've got some real critical information I want to share with you. And it's so serious that I just brought my computer with me, and because I made notes and references and all of that, and I just said, you know what? My viewers know that whatever I'm telling them is going to benefit them, and they don't really care whether I'm doing a computer, which is what I got going up here, or not. But again, I welcome you to today's segment of The Power of Money, and I'm going to be talking about long-term care services today and how to pay for these things. Now, before you go into a thing with me about why does he keep talking about aging and long-term care and all of these things, I'm talking to you because, according to statistics, the largest demographic shift in U.S. history is taking place right now. There are over 10,000 people a day leaving the workplace and entering into the phase in life called retirement, okay? Which is you don't get to take a day off and call in because you're out. And that number is going to total over the next 20 years to over 78 million people. Do you hear what I'm saying? My God, I'm in that group. As I told my previous guest, I'm not interested in retiring, but I do want the freedom to kind of do some things that I really am passionate about. Like I'm passionate about young people, passionate about overseas Christian peace, missionary pieces that I'm involved in and have been. And now I have the freedom, the time freedom, because you know what? Freedom is when you don't have debt. That's freedom. Oh my God. When you don't have debt, when you have the liberty to do the things that you're passionate about without asking somebody's permission or consent. And again, it's about, in those retirement years, being in good health, being able to live just vibrantly. It is so saddens me when I look at so many people that are retired who have traded out working for a boss to doing nothing, because that's not what retirement is about. Retirement is about being able to have all your ducks in a row, being able to do the things that you want to do, a desire to do, be able to spend more quality time with your family, including those wonderful grandchildren and great-grandchildren if you're tremendously blessed, the ability to have an adequacy of resources to anticipate things that are coming down the pike that you may not necessarily be prepared for, which is why I'm talking about long-term care, because the reality is this: of all the things that people have prepared for in their post-retirement years, very few people have properly prepared for mentally and funded financially long-term care. And yet the data is staggering. I just read an article that said that seniors were going to be short about $350,000 based on unanticipated medical expenses. Now, and please understand that as much as we love Medicare, if you're 65 and over, you already know about that health care plan. Medicare does not pay for everything. And there are caps and deductibles attached to each plan that you have to pay for. They've said that this was an area that seniors were not prepared for. And the other area that seniors were not prepared for was chronic illness and complications from chronic illness. What is chronic illness? Diabetes, heart problems, inflammatory conditions such as osteoarthritis, and on and on. Seriously, not prepared for them. And how do you deal with it? So before you go into a thing about why is she on this, I'm on this because somebody's got to sound the alarm so that you can wake up and begin to look at your situation critically and begin to make those decisions. First thing I want to say is, according to Genworth's Cost of Care Survey, here as of 2016, national median annual cost for various long-term health care services, homemaker services. That's for people to come into your house and to clean your house and to cook your food and to wash your clothing, change your linens, and major if you're going to be in the home. You need help. And those homemaker services run, according to this Genworth survey for 2016, $45,760. Woo! Home health aides. These are people that come in and administer your medications, assist you in getting in and out of the bed. And that tab is $46,332. That's in 2016 dollars. If you're able and someone's willing to get you there, adult daycare health facilities, $17,680. It's where they watch you throughout the day. You cannot be bedridden. You have to be ambulatory. You have to be able to get around. Assisted living, which is really popular today for a lot of people that say, well, I'd like to live in a situation where if I needed help, I can get it, and it's right there. And that's going to cost you, on average, annually, $43,539. Nursing home care. That's if you cannot do you. Translated, you need somebody to take care of you 24 hours a day, known as a nursing home. And that cost for a semi-private room, that's where you're sharing your room, is $82,125 a year. For a private room in a nursing home, this is again median, $92,378. Whoa, my God. How can a person pay for these services? And for those of you that are listening that are in the provider end, I hope you pay special attention, because many people need your services and you provide tremendous value for those who are not able to get along with their activities of daily living, like cooking and cleaning and getting in and out of bed, getting in and out of the bathroom, taking care of themselves, because with these sicknesses and disease, there is no cure. How many of you all know that it is entirely possible to get sick and not get better? Especially women. Women have ailments. So I tell men, you just die. But women have ailments. They suffer from all kinds of debilitating situations, and they need help. But again, I'm just giving you the cost structure. Homemaker, $45,700. Adult daycare, a little better, $17,680, but they don't administer medications. They do not take responsibility for a lot of the things that you would expect if you stayed in a home, but it's cheaper. A nursing home, if you want a shared room, it's $82,000. If you want your own room, it's $92,000. How in the world are you going to pay for this? Particularly when the statistics say that the average retiree only has $25,000 in their savings account. Oh, you can talk to me about Social Security, which you get every month, and some of you get more than others, and that's great. But the reality is you cannot afford many of these expenses that are related to long-term care where your body doesn't get better. Okay, you're just trying to maintain. So when seniors say to me, I'm worried, I tell them I can relate, because this is worrisome information. But again, my concern is let's look at how you pay for these things and what your options are. Okay, if you're one of those people that only has $25,000 in savings, but you got a nice hefty pension and Social Security, God bless you. Okay, maybe you can work something out. But for those of you that don't even have that, well, we'll talk about that more. Option one on how to pay for these services, Medicare. Now, major misconception out here. Medicare, which is a federally funded health care for seniors over the age of 65, is not Medicaid. Medicaid is long-term care for poor people. And the government is really not flexible about what they consider poor. They have guidelines and they have requirements. That is not Medicare. Please, my God, please be clear about the difference, because Medicare does not pay for long-term care at all. It's a health plan, okay? Under Medicare, you get up to 20 days of skilled nursing care, and it's 100% covered following a hospital stay of at least 3 days. Now, this gets tricky because you must stay in the hospital 3 days. You cannot be in and out. It will pay for skilled nursing care, 20 days max. From day 21 to 100, a daily coinsurance of $161 must be paid out of pocket, and after day 100, the cost of the skilled nursing care is 100% out of pocket with no further coverage. So basically, Medicare will provide a little bit of skilled, now notice I said skilled nursing care, meaning doctor required, for a hospital stay of at least 3 days. That 3 days is totally non-negotiable. After 100 days, you're on your own. If you want to know more about it, go to the website medicare.gov, medicare.gov. It'll give you lots of information. Read it carefully, because time and time again, I sit down, I'm in social settings and public settings with retirees who actually believe that Medicare is going to pay for their skilled care nursing and for their long-term care needs if they have to go longer, okay? It is very, very expensive to be sick. And before you're finished, you may be poor, as Medicaid would like to qualify you. Which brings me to option number 2, which is Medicaid. And Medicaid will cover long-term care expenses if your income and your assets are below a certain level as mandated by your state. Now, this is very important, as I share with people. In many cases, you will need to spend down the majority of your assets before qualifying for this program. Again, if you want to know about Medicaid, type in medicaid.gov. It'll give you information. This is a federally mandated, state-administered program where the state that you reside in bears a portion of the expenses, and the federal government chips in a significant amount as well. But here's the rub on Medicaid. Medicaid is for poor people. It's their safety net. And it's a good thing. It's a good thing. But here's the rub. In the state of Ohio, for example, over half of the budget is devoted to paying for Medicaid for seniors. They do have Medicaid for children, but I'm not talking about children. I'm talking about seniors. The state of Ohio is fronting out that amount of money. And are they happy as policy administrators? No, they're not happy. So, because the bottom line is nobody thought they would be fronting this kind of money to take care of seniors with long-term care challenges. Most seniors today in nursing homes are sadly on Medicaid. And while it is not legal to discriminate if you are a nursing home that does accept Medicaid, and not all of them do, there's some very high-end nursing homes that you are not going to get in because they don't take Medicaid. They don't want to deal with the headaches of the government. They take private pay or they take your cash. You pay for mom to stay in those high-end places, and hopefully you can afford it, because if you can't, she has to go or he has to go to a facility that probably will qualify for Medicaid. Again, no games here. No games here, okay? No games here. Medicaid is for poor people. The spend down requirements can include your home if you're single. If you're not single, your spouse will not lose the home. However, the state will file a lien. When you go to sign up to go into that facility, there are documents that you will be signing, and one of them gives the right for the state to collect their money, which means that your wife or your husband can stay in the home, but upon their demise, or if they go into a facility, the state will proceed to collect. Now, I've had seniors, and I don't know why you believe that the government's just dumb. They say, I'm going to transfer the house to my children. And I say to them, you do know that what you're doing has been done before. That's why they have look-back rules, which means that, you got 5 years. By the time you do it, you're not going to be qualified, okay? And the same thing with bank accounts and other things. This is the reality. And I hate to rub you wrong, but I'm going to keep it real because I deal with this stuff regularly. And it so hurts me. It just does. It hurts me. It's like, are you going to scam the government? That's interesting. But here is my recommendation. And that is that if you anticipate not having enough money to pay for your care, then anticipate going on Medicaid and anticipate losing everything you've accumulated, because nursing homes are expensive. And it is really not, if you think about it, it's really not fair to expect the taxpayer, the American taxpayer, like we're not paying enough, to cover you for long-term care in the form of Medicaid when you can afford it. Now, at the point you're spent out, there's Medicaid. You say, but I want to leave a legacy. Well, again, this is all about planning and having your ducks in a row before you find yourself in this situation, because I don't know about you, but you know what? I'm going to be 65 shortly. I will be on Medicare as a recipient. And you know what? Life came faster than I thought. It did. And I'm looking at things very differently than I did 10 years ago, 20 years ago. I was raising children, dealing with all those things that go along with life. But when you move into another season in your life, then things have to change, and you have to be willing to face up to it and recognize that I got to handle my stuff. Instead of spending a bunch of money on a vacation, maybe you need to look at some options to make sure that you have things in order. You may have to pay an estate planning attorney to look at your situation, or you may have to pay somebody like me to look at your finances and see what can be done differently. But these are two programs that get confused all the time. Medicare, which is a government-sponsored health care plan for individuals 65 and over. Mandatory, I might add, not optional, mandatory that you enroll. Whether you're using the benefit or not, 65, you better be enrolled, okay? You can go to socialsecurity.gov to get information, or medicare.gov or Medicaid. These are websites that you can access and learn. Or, you can go to a specialist and get some information on that. My point is that stop thinking that your government health plan is going to pay for long-term care. And, the sad thing about it, and this is so disturbing, is you work your whole life, taking care of children, paying your bills, trying to keep yourself above water, scrapping around. And then at the ripe age of 70, you take a fall, or you have a heart attack, or they diagnose you with some kind of an incurable, cancer. Not everybody dies from cancer, right? It goes into remission, but still the bills continue. You still have after effects, post-radiation effects from cancer that may require long-term care. And then you find yourself writing checks and more checks and more checks. And by the time you really are done with writing checks, you are broke. Okay? So this is why I share with seniors to please, and not even seniors, pre-seniors, and even younger people, plan for the inevitable. If it turns out better, I do know centenarians, people over the age of 100, who look great, who are doing great. I know people in their 90s that are independent, living well, etc. But the reality is this: as you age, stuff starts breaking down. Your bones start breaking down. That's why people fall. And they don't get better. They fall. And that's why many times older people need surgeries, but doctors are not going to do it because they're like, we're not going to get them on the table. And then they expire, and their families looking to sue us. So they don't want to do procedures because the person is considered not suitable for surgery. It's all about aging. But it's very important. It's very important that you plan for these things. So that's why I'm going through it with you. Option 3, if you have life insurance today, some insurance companies allow policyholders who need cash to pay for their terminal or chronic illness or other long-term needs to cash out their own life insurance policy. On average, if you have a condition that is terminal, meaning you got a year to live, you're able to receive 25 to 95% of the policy's death benefit. That's nice. That's nice, okay? Because you need the money to pay for your care, all right? And that money may carry you for a couple of years, and then you're back to square one, okay? But the nice thing about that plan is if you do use the benefit and you don't die, and you do have to go into a facility long term, they don't have to attach your policy because you basically depleted out the policy. So that's a plus in the midst of so much negative, okay? The accelerated death benefit from your life insurance policy. How to find out if you have it? Call your life insurance agent. That's a good way to find out, and that's what they do. They will help you to read the policy. Do not call me if you have an insurance policy with someone else. As I told one lady, that's their job. They sold it to you, so they should be willing to explain to you the features. Or you can call the company, and the company has a policyholder services department, and you will meet a delightful person over the phone, and they will explain it to you so that you understand. There are resources. You don't have to kind of wander around trying to figure out how to do this. Um, Key thing, in order to receive the benefit, the policyholder needs to meet the insurance company's requirements, proving that they are severely and or terminally ill. There may be tax implications involved, and the death benefit that may have gone to beneficiaries will be likely to be reduced or eliminated. Again, contact your insurance company for more information, more details, etc. But this is nice if your policy has it. Many of the older plans don't have it. Many of the newer plans, however, do. Option number 4, and this is one of my favorite options because I like it, okay? And that is the reverse mortgage. Today it's been completely revamped, and the government, which has been involved in this program since 1988, okay, FHA has insured this program. FHA is a division of Housing and Urban Development. It is a massive government agency over the housing industry in America. This product has changed. So please, whatever notions you have about this product being a product of last resort, desperate people, stop. It's changed. It's just like cell phones. It wasn't too long ago you were using a landline and clunky phones and pay phones, and now everybody's got a smartphone or just a simple phone or an iPhone. Things change. And again, be willing to move with the change. Just don't say, oh, I can't believe that. I can't believe somebody would do that. Excuse me, almost 1 million people so far have done this. Why? Because the program has changed. Do you not know that under the new HECM, reverse mortgage, you can use it to buy a home with no monthly payments? If you're senior over 62, you can use it to come out of foreclosure. The things have changed. And so I tell people, please, it's just like looking at TVs in the olden days when at midnight it went bzzz off. Now it's 24/7. And you pay to watch your programs. Can you imagine people pay to watch programs? You didn't back then, but things change. So I'm putting this out because for many of you, this is a very real option. Now, let me just share with you right up front. Because of the problems that the federal government had with this program in the past for misuse and abuse from both sides, okay? Let's talk about from the bank side. You had loan officers charging horrible fees, way too much. But then on the other side, for those of you that say, well, my girlfriend went into foreclosure, I'm going to tell you that she went into foreclosure because she didn't pay her real estate taxes. And I'm also going to tell you that if you bank with any bank in the United States of America and you do not make your real estate taxes and keep your homeowners active, guess what? They're going to foreclose on you too. Because in the contract, you are required to keep these things current. Do you not know that if you are delinquent on your real estate taxes, that the municipality has the right to foreclose on that property, preempting the bank? Nobody's going with that. And many, many seniors, and I've had them say to me, well, Ms. Graves, I didn't know you had to pay real estate taxes. And I'm like, okay, so are you assuming somebody else is paying real estate taxes for you? Well, I didn't think I had to pay. I didn't think I had to pay. Well, you do have to pay. It's in the contract, and you have to pay. So I share with seniors a lot, and let me tell you some other stuff that seniors did. And I can say this because I brought this product into the state of Ohio 20 plus years ago. Me, I did it. I did it because I saw so many widows that owned homes and could not make their bills. And this was an ideal product to help them. And I still have widows that I did loans for back then who are still the beneficiaries of this remarkable program. One woman is approaching 100. And if she dies tomorrow, the estate will not be at risk because it's insured by the government. So, you know, and she tells me every time I see her, oh my God, I can't believe I am still enjoying the benefits of this program. I'm still living in this house and I'm not making mortgage payments. I do pay my taxes. I do pay my hazard insurance, but I'm still living in this home and I love it. And she's a retired nurse, awesome woman. I love her dearly, but it worked for her and it's worked for many others. Some, it did not work because they took all the money and they just spent it. They went to visit family, they bought cars. You know what? When you are 80, you cannot act like you're 3. You just can't. Because then they spent all the money and they had nothing left. And then they were frustrated because they didn't have anything left. And as I say to them, and I say it to you, we are adults, and I would appreciate it if you would leave that kind of behavior for the young people and just be a grown person, okay? Just be an adult. So that's my take on reverse mortgages. I love them. I'm not going to lie. This thing has changed everything, but it is not a loan of last resort. The federal government does require that you have, they do a financial assessment. They don't look at your credit, but they do want to make sure that you pay your mortgage on time. They want to make sure you've never been delinquent on your taxes, okay, your real estate taxes. And they want to make sure that your homeowner's insurance has always been paid on a timely basis. Those are criticals for them because that's where they got burnt, okay? So they're not looking to be a last resort product, but they are looking to be a product that will provide you with peace of mind, a cushion, okay, where you can leave your money in a line of credit that grows. It does. The government credits every year interest onto that account that you can use. And you can pull out money to pay for these expenses. Tax-free. Do you hear me? It's considered a tax-free loan. I like that, okay? I like that. They do require that your mortgage be paid off, but you get this lovely benefit called a line of credit that grows through compounding to be something impressive. So, let me go back to basics. If you plan to stay in your home as long as possible and receive in-home care, then a reverse mortgage may be able to finance that. Again, according to the National Reverse Mortgage Lenders Association, more than 920,000 senior households have used an FHA-insured reverse mortgage loan, and more than 625,000 are in current use. This is a program that's just hitting stride. Again, you have to be 62 years or over. You don't want this program if you're planning on moving out of your home, but it's excellent if you'd like to supplement your retirement income and you'd like to be able to have access to financial resources tax-free. So the question that many people ask me on this product is, I wanted to leave the home to my children. And my response to most of them is, sir or madam, your children don't want the home. They fought like cats and dogs when they lived there with you, remember? What they want is money. And they get money through the benefit of life insurance. Yes, at your age it's going to be expensive, but if you're concerned about legacy for children, that is the venue to use, life insurance, not your home. The purpose of your home is to make it work for you, not somebody else, but for you. And if you need the money, this is a venue. It supplements your income by tapping into part of a home's equity. It's based on your age, the value of your home, and the prevailing interest rate at that time for that product. Simple as that. Simple calculation. You can go to AARP's website, and they even have a website on that's product, and you can calculate. There are other calculators on the internet as well. Just remember, it is a mortgage. The lien is held by HUD. If you go downtown, you'll see it's a HUD lien. HUD has a lien on your property, not unlike the bank having a lien on your property, okay? With a reverse mortgage, it has to be paid off if you're out of the home for a year or more, or you move. You have to occupy the home. You don't have to repay the mortgage for as long as you live in the home. Many people do continue to make payments on the mortgage, which is a nice feature because it builds up their line of credit. I'm telling you, it's amazing. It's right there for you to use. Will it affect your Medicare or Social Security benefits? Nope, because it is not income. It is a loan. You keep title to your home, the same as your regular bank. So again, if the home goes upside down where you wind up owing more on the home than the home is worth, again, don't worry about it because it's a federally insured product and the estate will not be responsible for any deficiency. In the meantime, you got peace of mind because you have a line of credit that allows you to tap into for paying for long-term care premiums, which is my next thing. I'm going to talk about that in a minute. And other things that are related to your living expenses while you are dealing with long-term care. One of the complaints I hear all the time from seniors is that I can't afford long-term care. And based on the statistics, I absolutely believe them. But as I share with them, do you own your home? Or is your home close to paid for? Then why don't we consider tapping the equity in your home? Well, I got a loan with the bank. Yes, but here's the catch. If you have a traditional HELOC, they're called home equity lines of credit. Number one, they can only do that for you for 10 years. Then you have to fully pay off that loan. Secondly, and this is most importantly, you are going to be paying back. Remember, it's a bank loan. It's not a HECM. HECM is an acronym that means Home Equity Conversion Mortgage. Note I said mortgage. It converts the home equity into a mortgage with no monthly payments. Nothing fancy about it. That's just what it is, okay? When you have a regular mortgage, you're making payments every month. You're paying interest on that money. And at the end of the 30 years, your home is yours. But it doesn't matter because you can't tap into the equity easily. With this product, you can, and that's why I give it a high five. Yay, 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 a high five. And for those who are detractors, you need to take a Brillo pad here and relook at this product. The American College of Financial Services, which certifies life insurance people, etc., has written some awesome articles. Forbes magazine, this whole thing has changed. It's considered a resource for retirement. Actually better in many cases than your stock and bond portfolio, okay? Because unlike that particular investment option, the line of credit is guaranteed. It is nice. But let's move to the final option, and that is long-term care insurance. I love long-term care insurance, okay? When you think about paying for long-term care services, you typically think about this option. And again, there are many types of private plans designed to pay for care not covered by Medicare, general health, or Medicaid. The number of long-term care insurance plans over the recent years has been on the decline. And the reason being is that when the industry first came out with this, they did not anticipate seniors using this product as much as they do. And they didn't expect seniors to use it for as long as they used it. So in doing their actuarial calculations, which is what they use to determine longevity, etc., they erred in their demise. They didn't calculate premiums right because, again, seniors did not cancel this policy. They used it. You know, insurance companies are profit-making enterprises, which I tell people all the time. They're not your local church, synagogue, mosque. They pay taxes. They're in the business of making money. And it's based upon life expectancy. It's based upon your mortality, incidence of sickness. And if they miscalculate, they're going to have a bad year. And what they typically do if they miscalculate is they just shut it down. They just shut it down. They don't do it anymore. And this has been on the rise in recent years because they were paying out more than the senior had paid in. So the negative is that for seniors that didn't use the plan, they were like, yeah, but I paid out that money and I never used it. And I'm like, yes, but it's like fire insurance. You paid out that money, but the house never caught on fire. Or it's like health insurance. I've never been sick, but I'm paying those premiums. It's all about risk management. And I can tell you the probability of you needing long-term care is so much higher than any other form of insurance while you're living. Now, of course, life insurance is when you're dead, or you can borrow to do things, but it's primarily purchased to provide support for your beneficiaries, pay for your final expenses, that type of thing at death. But long-term care insurance is a little bit different. I strongly recommend, if you do long-term care, that you deal with credible long-term care companies and brokers. I've had Ray Copenhaver on my show and Randy Gallus. These two men are considered the top in the state of Ohio. They're great. They're sharp. Randy and Ray are both well into their senior years, been doing this for years, know the pros and cons, and can help you. But again, in this program, the challenge is payments. How do I make these premium payments when I am on a limited income? I don't want to deplete my portfolio to pay for premiums. Although you may want to, because if you go into long-term care facility, aka a nursing home, you're going to have to hit up that money anyway. And you're talking about watching your reserves go to naught. That's a good way to happen. If you had a reverse mortgage, you just write a line of credit, pull down from that line of credit and write a yearly premium, and you're done for it. Okay? Why? Because it's going to allow you to keep your assets under the partnership plan. It's important that you ask for a partnership plan if you're going to do this. Finally, there is a new game called a hybrid, which combines life insurance or retirement income annuity with a long-term care policy. With these hybrids, at least you'll be able to leave a death benefit to your loved ones or receive income from the annuity if your long-term care policy is never touched. Again, if you want to know more about it, back to that internet again, just longtermcare.gov, no space, longtermcare.gov, and learn some things. There's a lot I can say about long-term care. I tell people that unless you are going to expire, you are going to find yourself needing help. And many, many seniors, again, they don't want to be in a nursing home, and with a private plan, you don't have to be. You can do all this at home, and the insurance companies will pay for you to stay at home, okay? They'll pay for you to stay in a home. That's major, all right? Medicaid, you got to go into a facility, a Medicaid certified facility. Let me be careful, because not all facilities are Medicaid certified, and many of them don't want to be, because they don't want to fool with the government. But again, these are all options so that you can better risk manage your life at a very, very, very key time. You know, aging is funny, and getting older is not the same as aging. Numerically, you will count the years, but aging is a different animal altogether. And I can speak to this rather directly, as people say, well, you know, the money lady, she tends to be direct. And I'm like, I gotta be direct, because this world system is not kind to people who are not informed. It's not a kind place. If you go out here hither, thither, thinking that everybody's just gonna be okay. And I'm like, I don't know where you read that, and if that was a part of your Cinderella fairy tale experience, but we live in a world system, a national system, that does not reward people who do not have their facts in order. This is why I've tried to do this show over the years. I started doing this show, according to my videos, in 1981. Can you believe that? 1981. Called it The Money Game. Why did I do this? Non-compensation. Because I was absolutely persuaded that without education, people were going down for the count. Or as young people say, you got run over by the bus, bam. It doesn't work. All the selfies in the world, and beautiful smiles, and wonderful jewelry, and those bespoke men's shoes that I love so much from England, none of that means anything when you do not have reserves, and when you have not managed your life properly. It does not. Now, there are some of us that say, well, I don't care. I'll just go on Medicaid and call it a day. And I'm like, that is certainly an option. And be glad you're in America, because most of the world does not have Medicaid. If you are old and broke, you better get out here with a cup and start begging. I am so serious. There is such a disregard globally for older people and their material well-being. Actually, most older people wind up staying with their families, and that's an optimal situation. But in America, we are in a situation where families are all over the place. And your daughter may be in Seattle, and your son may be in Washington, D.C., and your other son may be in Miami, Florida. And here you are, a widow, struggling, trying to figure out how you're going to make it. And your children are all over the place. And truthfully and honestly, your care is in question. Who's going to be willing to take care of you? And I say to all seniors, here's what handling your long-term care needs means for the family. They don't have to worry. They don't have to worry. You can lay out a plan that works for you. You don't have to leave your house. You're in your house. You can enjoy your house. Who wants to relocate and try to make that happen, and try to sell off stuff and try to make that happen? Who wants to deal with that? Okay? I'm just putting these things out to you, not for you to start stressing, because I did experience that this past weekend when I engaged in a conversation with several seniors at an affair. And the woman was a very savoir-faire woman, and her family members were very savoir-faire, but they had made no provisions for the space between where you're now and when you're dead. They had done their wills, they had done their directives, but they had not factored in what happens if you don't die. You just live and live and live. And when we went through all of the mechanics, including her telling me, oh no, Medicare has got my back, and I'm like, oh no, Medicare does not have your back or your front or your head or your toes. She excused herself from the table and went to the bathroom. And I know why she went to the bathroom, because she was having a panic attack, okay? Because nowhere in our conversation did I hear anything about my children are going to take care of me, okay? She talked about how successful her children were, and they were in different areas of the country, but at no point did she give me any indication that anybody was going to take care of her and able to take care of her. You know, they got bills, they got kids, they got my God, what's she going to do? A real situation. Today's subject for your information and education was paying for long-term care services. And I gave you 5 options. I didn't rank them, I just gave them to you. You already know I have a preference for reverse mortgages if you have equity. The line of credit is awesome. Google it. You're going to see some recent articles. Last 2 years, so many changes have occurred. It's an awesome product. I've also talked to you about private pay, long-term care, and how to pay for it. Okay, you can pay for it through your accounts, or you can pay for it out of your line of credit. That's how you pay for it. Nah, not rocket science, but thought you'd like to know. Thank you so much for being a part of my world today. As always, I appreciate your viewing. I appreciate your comments, and like to hear from you. You can always call me, 513-237-3914. That's 513-237-3914. And as always, I want to thank the phenomenal production crew at DATV in Dayton, Ohio, led by Ben Artist. Mwah, love you so much. Awesome, awesome man who's kept this show alive and vibrant for 3 years in this particular venue. So I just want to say blessings and peace to everybody, and you take care of yourself. See you next time. Bye-bye.